All right, everybody. Welcome back to another episode of Not Financial Advice. My name is Sean, and on today's video, we're going to be talking about a subject near and dear to my heart, which is the proclamation never sell stocks. So, just the screen today and my commentary. As you can see here, I made $581 on my 147.2 shares of Smith& and Wesson stock on Friday. Um, and today is Sunday, March 10th, early in the morning, so the market's closed. But, I want to talk about this concept, and it's confusing because the question would be, don't we invest in stocks so we can make more money? And if we want to make more money, what's the point of having it if you don't spend it? So there are some things to educate you on and some thinking errors that regular middle class people need to be educated on, but it's a secret that's kept from us or not taught to us. And so I'm going to pass on what I have to say on the subject right after this. All right. So I'll ask you guys to like the video and subscribe to the channel. If you notice the camera is not on, dealing with some loss and grief and turmoil in my own life, but um, I want to stay consistent with this YouTube channel because I know that I've got a lot of great insight that I can bring to people, and that's valuable and that's important. And so, as I shared in my last video, uh, not actively working, tried to quit my job, but they wouldn't let me. They put me on this long, drawn out, stupid leave where I actually didn't even take any money because I didn't feel it was ethical because I didn't believe in what the company was doing. I have all these privileges and luxuries, not only as an American in 2024, but also due to my own personal life circumstances. Um, this is all new money, but I've got a safety system, a structure of support above me, live with my parents. So I'm not gonna have to sell any of these stocks, even though I don't have income coming in. But it's pretty remarkable, because I am the richest, poorest, no, the other way around. I'm the poorest, richest, poorest man you've ever met. And in one day, I made $581 um, just by holding a stupid quantity of an undervalued small cap stock that no one believed in. And that is the message of the story. It's actually pretty remarkable. If you look, the market's been on a tear, and I think there were some jobs numbers on Friday that showed the economy was still pretty hot, which leaves questions about when is the Fed going to cut and how often will they cut and how much will they cut. Although earlier last week, Jerome Powell testified before Congress and said, we're definitely thinking about cutting this year. It's definitely probably going to happen. It doesn't even have to be perfect. We're going to cut. And so that's why you can see that small caps relatively outperformed the index, which was down 0.65%. But strangely, my portfolio was up 0.61%. It's $452. All of that was encompassed by the gains in Smith& and Wesson brands. So let's do a little bit more of a longer term update on the portfolio. Over the last 3.5 months, my portfolio is up 14.1%. If we go to VOO over the last 6 months, we can see that, well, I'm up 14.1%. The market is up less. The market is up this amount, 13%. So market's up 13%. I'm up 14.2. So that's pretty cool. And a lot of that comes from just weird stuff that's not highly weighted in the market, specifically Smith and Wesson. So, um, taking a look at this price chart, a couple learning lessons before I even get into that. How do you make money from a stock if you never sell it? Well, you get paid dividends. Um, Also, in holding a stock, if you're in the right type of investment, oftentimes the company will buy back shares, meaning if you buy one share today, in 10 years, you could own twice as much of the company. They remove the amount of shares in the market, creating sort of that scarcity, that demand, and you own a proportionally larger amount of the free cash flow and the earnings represented by the shares outstanding. And as those earnings and free cash flow dollars become more desired, those shares which the company have bought back, not the ones you own, but the shares that they've bought back alongside the shares that you faithfully hold, become more valuable, not only because of the performance of the company, but also because of the supply and demand characteristic of it here. And so, you know, there's that. Not selling also prevents you from having taxable events, but I mean, what does it look like if you buy and don't sell a stock? And it's a little bit facetious because, I'll sell this at some point in my life, but the stock is up 44,000%. Let's just say we bought it from not at $5. Okay, so say you put 10,000 bucks in it and it went up 250%. How much money is that? I don't know, a lot. So you can really truly have a life-changing amount of money just by buying decent quality stocks and not selling them. And so how do you know if something's a decent quality stock? Well, you can go to Qualtrum, where I spend a lot of time. Big fan of Qualtrum. I pay them money to look at their stocks, look at their data on stocks, rather. And so when I say don't sell a stock, that's also facetious. So, um, if you just plain don't want to be in a stock, you say, I don't want to be tied at the hip to this thing anymore. I just have an off feeling about it, or I don't believe in the direction this is going. You can just get rid of it. You can do whatever you want, but in a past life, um, this is a hobby of mine, firearms. So, I follow the Peter Lynch credo: buy what you know and know why you own it. And so I know who this company is. I know that they have high quality products. And so if you buy a company that you know and you know why you own it, you don't ever have to sell a stock. But you want to, at the very least, value a stock. This is probably one of the crudest and most dangerous, but also easiest ways to value a stock is how much is it trading off of its all-time high. So seeing something down 44%, that's great if it's actually a profitable company where things are going up into the right. So if you don't have a way to know that a company is going up into the right, you can go to Yahoo Finance. Data on there is free. You can also just ask ChatGPT, what is the earnings per share and revenue of Smith and Wesson over the last 10 years? That's probably free. You don't have to pay for that data. But when you see a stock of a company that you know and understand, and their stock price is way off of its highs, you can start there. You can look at its PE ratio. Of course, this second, the PE ratio is corrupted here, as I want to show it to you on Qualtrim. See, it says there's a PE ratio of 27, and it's not even really true. They just have lower earnings than average in this quarter. It's a cyclical stock, so you have to really know what you're doing. See, the funny thing is before I bought thousands of dollars of this, I conveniently ignored where on this very predictable ride I was on. This is a weird stock because it's cyclical, not based on macroeconomics necessarily, but based on political elections in the United States. That's what moves guns. This is a gun stock. You're not going to find it in an ESG portfolio. So, you know, just like a case of 9mm ammunition or what have you, the price is low before an election, then it goes higher before the election occurs or whatever. And so we're in that uptrend right now. That's a bullish chart. So I own this somewhere around here. Watched it go down 73%, 72%, and then by not selling, I've seen it go up 100%. But just in the last year, the stock is up 56%. And I mean, would you just look at it? But looking at, where this is heading, this looks like it wants to create a new pattern. It wants to create a new pattern coming up maybe to the same level or maybe even a bit lower. It wants to come up and create a new pattern, but what's going to happen is it's going to create a higher resistance level, most likely here. And I can wait another 4 years and I'll be in the doldrums and I can buy some more. They can buy back shares, pay me dividends, and then it'll create a new higher pattern. Okay. So this is the lesson. Don't sell stocks. If you just do a quick overview how this company is doing, overall, the revenue's up and to the right. Free cash flow overall is cyclical up and to the right. I know why it's been down. They went and built a whole new manufacturing facility in Tennessee, so I'm not worried about that. Earnings per share is cyclical, but has the ability to spike pretty drastically up and to the right. Very high dividend yield, very safe payout ratio. Them raising or paying dividends can also increase the perceived value of the shares on the company. So, really responsible cash and debt position, safe dividends, share buybacks, really good opportunities for return on capital employed, and historic valuation. That's just now a little bit above the average price, but it can trade higher. So, these are some rough things you can do to have understanding of whether you're investing in a company that that's a good quality company, and just have that confidence. Even if it's your local bank chain where they leave out cookies and their staff are so friendly and you've gone there since you were 5 years old and um, you're in it's a bank that deals mostly with such and such sort of customer. There's something that seems very rock solid about it. You can look into it on Qualtrim or on Yahoo Finance or on Chat GPT. Take a look under the hood. Learn what uh, revenue straightforward. Learn what free cash flow is. Learn what earnings per share is. Learn from me why free cash flow and earnings per share, as well as return on capital, are some of the main things that drive the returns of stocks. And then once you buy a good stock, all that you got to do is just hold it forever. All right, thanks for tuning in. This is Sean, not financial advice. Like the video on the way out. See you on the next one.